First up, the investment landscape is shaped by global currencies, equity markets and bond yields. While investing is all about satisfying the client, today investors, both young and old, have higher expectations for returns despite current market volatility. Helen Conradi, who's head of Satrix at Sanlam Investment Management, joins us from our Cape Town studio to discuss the major trends shaping the investment world. Helen, thanks so much for your time. And let's look at a couple of those investment trends and where we are going. So from a top level, what should we be aware of?
I think you've mentioned already the low return environment. What is important as well is that you have a low trust environment as well. So what we call an angry client. So the two together gives us quite a challenge. I think we need a lot of an honest effort, but also a lot of time to rebuild this trust, and then expectations management on the other side in terms of your return, very important.
And Helena, the key themes that you're seeing unfold from your perspective?
Yes, the two themes is basically your starting point, your low return, your low trust. So how do we react on it? And I think the angry client, maybe we need to spend just a minute on that. So many things happened, and the trust has been destroyed between financial services, financial environment, the investment management and the client. And the client is asking, where's my yacht? And it's basically the reaction of the client and the investment industry that led to, say, the next three themes that we can discuss as well.
So firstly, how do you rebuild that trust from an investment perspective with the angry client? Because we've got to move beyond an angry client.
Yeah. Yes, very, very interesting. And I think your show is part of it. Because the educational part, what we find is they call it the Generation D client, and it was research done by Accenture. It's basically it goes through all the different generations. You can be one. The Millennium X can be part of this Generation D. It's someone that is looking for information. You want knowledge and you want control. And we as investment industry, we overestimate the knowledge that the client has, but they want it. So education and trust, I think, is built by shows like yours. Google. What do you do when you want information? You Google. And then information in general. Financial advisors it will create a new breed of financial advice, I think.
The investor has to come to terms with this low return environment. I'm going to be focusing on that theme with Kevin Lings in just a moment. Do you think that the investor is going to accept the fact that they're not going to see the heady returns of the past?
Well, that's part of our big task, I think, is that we need to manage expectations. Double-digit returns, that kind of thing, is probably going to be a challenge for the next few years. And that brings us to almost the reaction of the investment industry. Next three themes, ESG, you go back to good for sort of greed for good. You look at the cost from a fee perspective as well as the cost of the investment itself, and then looking for alternative sources of alpha. And that's a big trend as well, where you see private equity, your commodities, and those kind of alternative sources of alpha that's been investigated.
Let's investigate that ESG theme just a little bit further in terms of investing for good. Are investors, in your opinion, getting their head around this theme?
Yes, I think it's a sort of a combination. They call it the new breed of philanthrocapitalists. So bringing the greed, but you take it to a new route of good. And people are seeing the benefits of combining. So you have a social return as well as investment return, and the profits, but also good then, providing clean water, providing protection against malaria, or sort of the combination of the two. People are definitely turning their minds around this.
And obviously in a low return environment, investors are going to become that much more price sensitive. Have you already seen that trend coming to the fore?
Definitely, and what is more interesting as well is if you ask, I recently attended a workshop where 65 professionals represented about 13 countries, and the lecturer actually asked what is the major trend going forward for the next, and it was cost. And that means the pressure on margins from both sides. So cost to the client, cost to the product, that is definitely a sort of a serious trend.
And how's the investment community reacting to that price sensitivity that we're starting to see coming to the fore?
I think a lot of questions. What is great is that no one is excluded. So this literally takes the pressure to the administrators, to the asset management, the financial advisor. This is not a sort of a focused area just for one group. And it's good to ask questions about the cost of your product and work out exactly where the profits goes to, where the cost comes from. And people are reacting. There's a lot of discussion, and the angry client is asking the questions.
Coming back to this angry client, do you think he or she's going to be around for a long time, or do you think that the investment community, coming back to our earlier discussion, is going to be able to pacify this client?
Well, Bronwyn, we can be part of the angry client. So I think it will be around for many times. It is a more educated client. And I think we should see it as an opportunity rather than a threat in the industry, because if you can capture and you can regain the investors' trust, that angry client's trust, it's a brilliant opportunity to work together rather than just feed information, but have a client that actually understands where we're going, expectations around future returns as well.
Helena, coming back to the active versus passive debate, considering you the head of Satrix at Sanlam, it would be remiss of me not to get your thoughts on what balance you need to strike in your portfolio when it comes to both those themes, active and passive.
Yeah, the obvious answer is definitely to incorporate a passive investment in your total portfolio. So what we believe as SIM and as Satrix as well is that you combine the two. So you combine active and passive. Passive will definitely address your total expense ratio, so the cost, and it also provides the opportunity for alpha. So see it as an alternative source of alpha, but very important, the combination rather than the two versus each other.
And then perhaps just finally looking at the take-up that we're seeing from the retail investor when it comes to passive strategies. Are we seeing much traction in this space?
We definitely, and I think it's driven mostly by cost. We would love it to be also driven by understanding of the total portfolio. So cost is an important factor in choosing a passive investment, but it's not the only thing. And that's where the education is going to play a huge role, and we're spending a lot of time on this. We need to gain the trust and the understanding of the client, and then you'll see it's the best to add that to your portfolio.
Helena, it's been a pleasure chatting to you. Thank you so much for your time. Helena Conradi, head of Satrix at Sanlam Investment Management. After the break, we're chatting to Kevin Lings, chief economist at Stanlope.